All right, today we are opening the case file on one of the most, well, dramatic stories in modern finance, the incredible rise and the absolutely spectacular fall of Cathie Wood's Ark Invest. $14 billion. Dollars. Just let that number sink in for a second. That's the staggering amount of investor wealth that just vanished. And this number, it's the whole reason we're here. It's the central mystery we're about to unravel. So that leads us to the big question, right? The one that's going to drive this whole investigation. How does a fund manager, someone who was hailed as a true visionary, end up overseeing one of the biggest destructions of wealth we've seen in a decade? To get to the bottom of it, we've got to go back to the beginning. Before the collapse, there was this incredible meteoric ascent. And to really understand the fall, you first have to understand the person at the center of it all, Cathie Wood, and her revolutionary idea that totally took Wall Street by storm. So back in 2014, Wood launches Ark with this really radical idea. She basically believed that traditional investors were just too short-sighted, completely obsessed with the next quarter's earnings while missing the massive, world-changing trends on the horizon. Her entire philosophy was built around this one powerful idea: disruptive innovation. And her whole strategy was built on what she called the 5 pillars of the future. Now, to her, these weren't just market sectors. No, these were the fundamental forces that were going to reshape our entire world. She wasn't just buying a bunch of tech stocks. She was investing in a very specific, very bold vision of tomorrow. And for a while, man, it looked like she had a crystal ball. In 2020, as the pandemic had us all locked down, her whole thesis went into overdrive. Her flagship fund, ARKK, just went vertical, soaring an unbelievable 150%. Cathie Wood wasn't just another successful manager. She was an icon, a true rockstar investor with a massive, loyal following. But, as we'll see, that incredible peak was just setting the stage for a monumental fall. And this is where our investigation really kicks into gear. We're going to follow the evidence trail, looking at the clues, piece by piece, to understand exactly what went wrong. Our first piece of evidence is one of Ark's most famous holdings, a true pandemic darling, the company that literally became a verb in 2020. Yep, we're talking about Zoom. And right here we see a crucial pattern start to emerge. The thesis was that Zoom's dominance was here to stay, but as the world started to reopen, the stock cratered. Now, instead of cutting their losses, Ark doubled down, buying more and more as it fell. This is our first clue, a refusal to admit the thesis was broken, which just burned through a ton of cash. Okay, so on to our second clue. Was the Zoom disaster just a one-off, a bad call, or was it part of a larger pattern? Well, the Teladoc case gives us a pretty clear answer. And with Teladoc, it's like we're watching the exact same movie play out again. The thesis, telehealth is the future of medicine. The reality, the stock absolutely plunged. And Ark's response? They doubled down again, even selling off some of their winning stocks to pour more money into this losing bet. This confirms the pattern. This was a high-conviction strategy of buying the dip on falling stocks that systematically destroyed investor capital. So these clues, they show a clear pattern of behavior. But there was one decision, one single trade, that stands out as the case-breaking mistake. This, right here, is the smoking gun of our investigation. This is the question at the heart of it all. Remember, artificial intelligence was Ark's #1 pillar all the way back in 2014. They had a decade-long head start on almost everyone. So how on earth did they manage to completely miss the historic AI boom that was ignited by ChatGPT? Just look at this timeline of Ark's investment in nvidia. It is absolutely devastating. They were in early, they correctly identified it as a core holding. But then in late 2022, after the stock had a tough year, they sold their entire position. We're talking just months before ChatGPT launched and kicked off the AI revolution, with nvidia at the absolute center of it all. The timing could not possibly have been worse. And this chart, well, this chart is the smoking gun. They sold after a 50% drop, right at the bottom, just before the stock exploded by over 240%. Think about that. They followed the exact same pattern we saw with Zoom and Teladoc, selling their biggest potential winner to fund their biggest losers, right before that winner became one of the most important companies in the world. So, with all the evidence laid out, the pattern of bad bets, and of course, the smoking gun of the nvidia trade, it is time for the final verdict. What truly caused the $14 billion collapse?
First, let's be really clear. The idea itself, thematic investing, isn't inherently flawed. Not at all. Betting on powerful, long-term trends can be incredibly lucrative. The problem here wasn't the what, it was the how and the when. See, the huge problem was that the entire economic environment shifted under their feet. Ark's strategy was built for a world of 0% interest rates, easy money, where investors were happy to fund bets on far-off future growth. But when interest rates shot up past 5%, the game completely changed. Money got expensive, investors demanded profits today, and Ark's strategy just shattered.
This quote really is the final verdict. Cathie Wood's vision of the future? In many ways, she was dead on. AI, DNA sequencing, blockchain, these are the defining technologies of our era. But having the vision and actually making money from it are two very, very different things. She simply misjudged the economic cycle and the brutal realities of market timing.
And that leaves us with this final, really thought-provoking question. The story of Ark is a powerful lesson in the difference between a great story and a healthy balance sheet, and it forces us to ask a really tough question about both investing and innovation. What's the real value of being right about the future if you get the timing completely, catastrophically wrong?